Welcome to Exchange Rates UK TV. It is almost 2 p.m. Eastern Standard Time on this 31st day of May 2021. Taking a look at Cardano on the daily chart. Trend line drawn from the all-time high to the swing high on May 27th. That was tagged as the high yesterday. Today we are presently trading somewhat above that a little bit, but really what we keep getting halted against is the Kijun-sen. That continues to be a source of pressure for price. There's roughly about 6 more hours left in the trade day, at least for the daily candlestick, and we are at roughly half of what was traded on Sunday. It is a holiday here in the US. It's a somber day, Memorial Day. And we don't have a lot of stuff going on here as far as cryptos are concerned. I mean, we do have some, I guess we should say we do have a green day. We do have a lot of things that are up. Bitcoin is higher, and it's according to Coinbase's data, or at least the index data, the volume today is higher than yesterday. Ethereum is lower volume, but higher on the day. So yeah, let's just kind of look at what's going on here. So again, Cardano, the Kijun-sen, a huge source of resistance at 172. We just kind of continue to see that hold and really don't see a reason why we should change our bias from, expecting some downside pressure. On the bullish side, though, you see the yellow line in the composite index. That's a slow moving average. Excuse me. The red line is the composite index line. Now that's already tested the fast average as support and it's held. Now it's pressing back up against the slow average to test that. And if it does break out higher, if it does move above, that's a bullish signal. Ideally, what would happen is that would occur, and then we'd see the percent B also cross above. We may not get that, but anyways, that bullish crossover event in the composite index is really only probably relevant if we get a daily close above the Kijun-sen. Because that is such a flat Kijun-sen, it's no surprise why we can't easily cross back above it. And we have that trend line acting as resistance. In fact, I'm not even sure what that trend line looks like on the hourly chart. If we draw it there, should probably get an idea of, oops, not that one, of what we are looking at, because we're currently trading above it on the hourly chart. Yeah, I mean, not really. It's not like a real breakout. It's more like kind of trading sideways here. So it is really under pressure to continue further south, but at least on the hourly chart, it could break out if it gets to 170. The weekly chart for Cardano, we did end up closing the week higher last week, which is nice. But really what it did do, I mean, this is what we were kind of expecting it to do, and I talked about this, really kind of ping-ponging between the Kijun-sen and the Tenkan-sen on the weekly chart, and thus far we are still doing that. Volume has continued to drop ever since May 21st. We just see, well, really, if you want to go back to February, we really just see a continued drop in volume and participation on average, so that's weighing down on the market as well. I think we should still look forward to a move south, especially if we break below 120. Then we will more than likely see these lower moves. I do want to point out, though, that when you look at the daily chart for Cardano, all right, the lagging span remains above the candlesticks. It's above the close of the May 6th candlestick, the lagging span is, but it's still technically above the candles. It hasn't dropped below. If it does, if the lagging span does drop below, that's going to be an early warning sign that we'll start to see a very fast move to the south. And especially with the volume profile right here at 120. I mean, let me just clear out the drawings here. So take a look at the high volume node at 116, between 116 and 120, we're just going to say 120, and then compare that level with what would happen if the lagging span dips below the cloud and has a close below the cloud. Really, we're looking at 115, 120, I think is the danger zone. But in the condition that the lagging span would close below the cloud, price would also be below the cloud. And all of the things that make a ideal, it's called an ideal bearish breakout in the Ichimoku system, all of the conditions that would need to be met for that to be fulfilled would be fulfilled if we get a close around that 115 value area. We would have the Tenkan Sen below the Kijun Sen. We have the future cloud red, meaning Senko span A. Future Senko span A is below future Senko span B. Future Senko span B is flat. We would have the lagging span below the cloud, and it's the lagging span below the candlesticks. So there's a ton of things really setting up for a really nice scenario to see things on the short side of the market. However, trends are stubborn things, and they don't just disappear because they've been existing for too long. The bulls here are very persistent. I'm one of them. The bulls here are very persistent. Anytime we've seemed to be getting close to even flirting with the idea of having the lagging span close, the lagging span continues to press on and move higher. So I wouldn't be surprised to see, let's see, we have tomorrow, Wednesday, Thursday, Friday, Saturday, Sunday, that we kind of stick around trading at least for the next few days in between 150 and 171. But then as we get into Thursday, Friday, Saturday, we start to trade back in the 180s. And really, when we get to the weekend, that's going to be a really telling thing for Cardano traders and investors, because we're really going to have to see a lot of conviction on the side of the bulls to see this trade higher. But otherwise, I mean, there's not a lot of conviction here. The volume's quite low. Volume precedes price. If volume continues to drop, so will price eventually. Not all the time, but eventually. But that does it for me. I mean, when we have these things where we just kind of a hurry up and wait, that's what we're going to do. Thank you all for watching. Hope you all had a great weekend, and stay safe. Hope you all have a start to a good week. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe.